Welcome to The Explainer. Today, we're completely demystifying the world of cryptocurrency. Now, I know it can seem incredibly complex, maybe even a little intimidating, right? But we're going to break it all down so it makes perfect sense. By the end of this presentation, you'll have a rock-solid foundational blueprint for understanding digital assets.
But first, I've got to ask you something. Have you ever regretted passing up a golden opportunity? Like, have you ever watched from the sidelines as other people scored a massive financial win simply because you were held back by fear, or market noise, or just plain confusion? Honestly, it happens to the absolute best of us.
In fact, it actually happened to the author of our source material today. Way back in 2011, a friend strongly advised her to buy Bitcoin. The price at the time? A mere $11. Her response? No way, Jose. That is way too risky. Can you imagine looking back on that decision today, knowing the historical highs Bitcoin eventually reached? Mind-blowing, right?
Well, luckily, she didn't stay on the sidelines forever. She went on to completely master the market, and our source today is the second edition of her comprehensive book, Cryptocurrency Investing for Dummies. Over the next few minutes, we're going to distill her extensive guide into a rapid-fire executive summary. That's right, we are going to capture the essentials of this entire book in 8 minutes or less.
Okay, let's dive into this. Here's our 5-part agenda for today. Welcome to crypto investing. Rewards, risks, and diversification, navigating the top coins, the IDIDA investment strategy, and finally, reading the crypto charts.
So, Part 1. Welcome to crypto investing.
To really set the stage, the sheer scale of the crypto explosion over the last few years is just staggering. When the first edition of our sourcebook came out back in 2018, the landscape was much smaller. Today, there are over 20,000 cryptocurrencies in existence. It is a massive, rapidly expanding ecosystem.
But hey, before we get lost in those thousands of coins, let's make sure we share a foundational understanding. Simply put, a cryptocurrency is a new form of digital money. But crucially, it's traditionally not attached to a central bank, a country, or a regulatory body. Instead, it operates on an underlying technology called the blockchain.
Now, what's really interesting about this slide is the scope of core benefits driving this whole new economy. Beyond just being a decentralized network, crypto actually has the power to empower the unbanked and underbanked populations of the world. Plus, some investors use it as a potential hedge against inflation. And fundamentally, it fuels this incredible sense of ideological empowerment by giving individuals direct, ultimate control over their own assets.
All right, moving right along to Part 2, Rewards, Risks, and Diversification.
When we contrast traditional investments, like stocks and bonds, with cryptocurrencies, the differences are pretty stark. Traditional markets offer a bit more predictability. Crypto, on the other hand, well, it offers the potential for extreme capital appreciation, but man, it is a wild ride. It comes with relentless market noise, severe price crashes, and significant security risks like scams and theft.
Because of those risks, risk management is absolutely paramount. The author uses this brilliant, super accessible metaphor for diversification. If you're traveling, don't put all your underwear in your checked luggage. Put an emergency pair in your carry-on. I love that. The key takeaway here, never ever put all your eggs in one basket. The author's golden rule is to build your traditional emergency fund first, long before you put a single dollar into cryptocurrency.
Let's move to Part 3 and see how this builds. Navigating the top coins.
So, a really great way to start identifying the heavy hitters in a market of over 20,000 coins is by looking at market capitalization. That's the total number of coins multiplied by their price. Take a moment to consider Bitcoin. It's the pioneer from 2008, sitting firmly at the top. And get this, despite major crashes, its value actually tripled between 2018 and 2022. Next, we have Ethereum. This is the top altcoin, primarily known for its smart contract functionality. And finally, you have growing competitors like Cardano and Avalanche, which really stand out for being eco-friendly with incredibly fast transaction times.
Which brings us to Part 4, the IDIDA investment strategy. Now, a lot of newbies rely on just one type of analysis, which, to be honest, is incredibly dangerous. The Invest Diva Diamond Analysis, or IDDA, protects you by combining 3 crucial steps. Step 1 is fundamental analysis, so evaluating the underlying value of the blockchain itself. Step 2 is technical analysis, looking at the historical performance right on a chart. And Step 3 is sentimental analysis, gauging the overall market mood, basically figuring out if traders are feeling bullish or bearish.
And finally, Part 5, Reading the Crypto Charts.
This brilliantly illustrates technical analysis. The anatomy of a basic price candle tells a really distinct story.
It shows you the open, close, high, and low prices for a specific time frame. A light-colored body means prices generally went up during that period, while a dark body means prices went down. Simple, right?
Let's actually look at a real-world application with this daily chart for Ethereum against the US dollar. The entire goal of reading these charts is to spot downtrends and uptrends early. You know the old saying, the trend is your friend. If you spot a downtrend early enough, you can set a limit order to buy more at a lower price. It's really all about using historical data to stack the odds in your favor, rather than just blindly guessing.
So what does this all mean? The crucial point here is patience over hype. True investing is not about gambling on the latest trend. It's about acquiring knowledge, managing your risks, and making informed decisions for the future of your money. As we move further into a digital economy, are you prepared to let temporary volatility scare you away from the future of money, or will you use these tools to take control? If you enjoyed this, subscribe to In 8 Minutes and never miss what matters.